All right, let's talk TTEC Holdings. We're diving into their second quarter 2025 earnings, and folks, this one was a big deal. After a really rough patch for the stock, this report was a major test, and the way the market reacted, well, it was nothing short of explosive. Let's break it down.
So, boom, the day after their earnings call, the stock just rockets up, closing more than 25% higher. A move like that is a massive signal from the market. So you got to ask yourself, what in the world did they report to cause a rally that huge?
Well, the answer starts right here with the headline numbers, and it was a pretty clean beat. Revenue came in almost $15 million ahead of what the street was expecting, and their adjusted EBITDA beat by nearly $2 million. The key takeaway here is that investors saw clear, undeniable strength in the core business, even if there was a little bit of noise around the earnings per share number.
Yeah, about that EPS number, it actually got a little confusing. You see, depending on which data source you were looking at, TTEC either beat expectations or they missed them. But honestly, the market's reaction tells you everything you need to know. Investors basically shrugged, ignored the confusion, and focused on what really mattered, that powerful revenue beat and solid operational performance.
And speaking of powerful numbers, if there's one figure that really jumped off the page this quarter, it was this one, $85.5 million in free cash flow. This was a massive signal. This isn't just an accounting metric, it's cold, hard cash, and it's proof positive that the company's new focus on discipline and execution is really, truly starting to pay off.
Okay, so those are the numbers. That's the what. But what about the why? What's the story behind the numbers? Well, CEO Ken Touchman made it really clear on the call. Their whole strategy revolves around a digital-first, AI-powered approach to completely change the game for their clients' customer experience.
So how are they actually doing it? Well, they laid out a pretty simple three-part playbook. First, they're using AI to augment their human agents, giving them superpowers with tools like AI-based accent neutralization, which just makes conversations clearer for everyone. Second, they're turning that AI inward to make their own operations, like hiring, way more efficient. And third, they're building their own unique tech to bring even more value to clients.
And all this progress gave management the confidence to do something investors love to see. They raised their full-year revenue guidance. Now, they did point out a little nuance with foreign exchange rates. It's helping revenue, but kind of hurting margins. Still, bumping up your sales forecast for the rest of the year, that's a huge vote of confidence in their ability to execute.
Now, you absolutely cannot understand that 25% stock pop without knowing this critical piece of context. For almost a year, the stock had this cloud hanging over it. The CEO had proposed to take the company private. But then, just 1 week before this earnings report, he withdrew the offer. The timing is everything. Removing that massive uncertainty unlocked the stock, finally letting it trade based on the actual strength of the business.
And if we zoom out for a second, you can see how TTEC's strategy fits right into what's happening across the entire industry. The CEO talked about how so many companies are struggling to figure out how to use AI the right way. TTEC is trying to become more than just a vendor. They want to be the expert guide, the Sherpa that helps clients navigate this really tricky transition to an AI-driven world.
Another huge piece of the turnaround story is their balance sheet, and this chart just says it all. You can see their net leverage, basically how much debt they have compared to their earnings, has been dropping like a rock. This is a direct result of that awesome free cash flow we mentioned. They're paying down debt, getting healthier, and the market loves to see it.
Of course, it's not all clear skies ahead. We've got to be balanced here. So there are some key risks to keep an eye on. That foreign exchange headwind could keep squeezing their profit margins. Their digital business is going through a bit of a transition, which could be bumpy. And, at the end of the day, they still have to deliver on their promises for the second half, which is never a guarantee.
But on the flip side, the potential catalysts for the stock look really compelling. If they keep generating that strong cash flow, that's just more fuel for the fire. They also signed 15 new, large clients who are just starting to ramp up spending. And if the demand for their AI solutions really takes off, you could see a clear path back to some serious growth and profitability.
So when you put it all together, you've got a strong quarter, higher guidance, huge governance issues finally gone, and a clear AI strategy that's working. The big question is, where does that leave us on the stock?
Our call on TTEC is an outperform rating. The removal of that take-private overhang was really the key that unlocked everything here. It allowed investors to finally see the business for what it is, a company with real operational momentum and a credible plan for the future of customer experience.
All right, so for the next call,
What are we expecting? We think this momentum continues. Look for another solid quarter of execution, probably leading to a modest beat on EPS, with revenue coming in right around where they guided. And that leads to a pretty interesting trade idea for more experienced investors. A pairs trade. Go long on TTEC, and at the same time short one of their old school competitors who just isn't adapting to this AI shift as quickly.
And as always, just a quick reminder that this analysis is for informational purposes only. It is not financial advice. Please consult with a qualified professional before making any investment decisions.